The year is 2025. The world has changed in ways we could have never imagined just a decade ago. Wall Street is no longer a street. It's a concept, a digital entity that exists in the cloud. The physical trading floors have been replaced by vast server farms in New Jersey, where rows upon rows of servers hum with activity, and the traders, replaced by algorithms. These algorithms execute trades at speeds no human could ever match. At the heart of this revolution is DeepSeek, an AI system designed to predict market trends with uncanny accuracy. It's not just a tool, it's a game changer. Created by a team of ex-Google engineers, DeepSeek promised to unlock the secrets of the market. These engineers, some of the brightest minds in the tech world, poured their expertise into this groundbreaking project. It could analyze mountains of data, from news headlines to social media sentiment, to predict which way the wind would blow. Investors were enthralled. The sheer volume of data it could process was staggering. Hedge funds lined up to get their hands on DeepSeek's predictions. The demand was unprecedented, with financial institutions eager to leverage this new technology. The promise was simple: make more money, faster. The allure of quick, substantial returns was irresistible, and for a while it seemed like DeepSeek could deliver. The initial results were nothing short of spectacular. Early adopters saw returns that defied logic. Their investments grew at an astonishing rate, far outpacing traditional methods. The market had a new oracle, and its name was DeepSeek. It became the go-to source for market predictions, revered and trusted by many. But as with any technology, the allure of DeepSeek was not without its risks. The very complexity that made it powerful also introduced new vulnerabilities. The very power that made it so attractive also made it dangerous. Like a high-performance engine, it required precise control and constant monitoring. Like a high-performance engine, DeepSeek needed careful handling. The engineers who created it knew this, and they worked tirelessly to ensure its stability. One wrong move could spell disaster. The stakes were incredibly high, and the margin for error was razor thin. The financial world held its breath, watching to see if DeepSeek would continue to soar or come crashing down. No company benefited more from DeepSeek's rise than NVIDIA. The chipmaker's stock soared as demand for its high-powered GPUs, the engines behind DeepSeek's algorithms, skyrocketed. NVIDIA became synonymous with the AI revolution on Wall Street. Its founder and CEO, Jensen Huang, was hailed as a visionary.
Investors poured money into NVIDIA, betting on a future where AI would rule the markets. The company's valuation climbed higher and higher, reaching dizzying heights. It seemed like nothing could stop NVIDIA's ascent, but the higher they climbed, the further they had to fall.
Then came the day the market froze. It was an unprecedented event that sent shockwaves through the financial world. Traders, analysts, and investors alike were caught off guard, unable to comprehend the magnitude of what was unfolding before their eyes. It began like any other, with traders glued to their screens watching the numbers flicker by. The hum of activity was palpable, a symphony of clicks and murmurs as deals were made and fortunes were won or lost in the blink of an eye. But then, something strange happened. The usual rhythm of the market was disrupted, screens began to freeze, and the once lively trading floor fell eerily silent. Confusion spread as traders tried to make sense of the situation. DeepSeek, the oracle of Wall Street, issued a chilling prediction, a market crash unlike anything seen before. This wasn't just another dip or correction, it was a catastrophic event that threatened to upend the entire financial system.
Panic spread like wildfire. The news of DeepSeek's prediction sent shockwaves through the market, triggering a mass exodus. People were running out of buildings, traders were shouting, and the atmosphere was charged with fear and uncertainty. Algorithms, programmed to react instantly to DeepSeek's predictions, began dumping stocks. These automated systems, designed to protect investments, instead exacerbated the situation, creating a feedback loop of selling and panic. The selling was relentless, a tidal wave of fear washing over the market. Traders watched in horror as their screens filled with red, signaling massive losses. The sense of defeat was palpable, as if the very soul of the market had been crushed. Circuit breakers, designed to halt trading during extreme volatility, were triggered, but it was too late. The damage was done. The market had already suffered a blow from which it would take a long time to recover.
It was a day that no one could have foreseen, yet everyone feared. The disbelief and fear in the eyes of traders told the story of a market brought to its knees by an invisible force. The market, once a place of calculated risks, had become a battleground of chaos. The orderly world of finance was turned upside down, leaving everyone to wonder how and when it would ever return to normal.
When the dust settled, the market was in ruins. The once bustling trading floors were eerily silent, with papers scattered like fallen leaves. The financial district, usually a hive of activity, now looked like a ghost town. Over $1 trillion in market value had vanished into thin air. Investors stared in disbelief at their screens, watching their fortunes evaporate in real time. The numbers on the stock market tickers were a sea of red, a visual representation of the financial bloodbath. The Dow Jones Industrial Average had plummeted by thousands of points. Traders, who had seen their fair share of market swings, were left shell-shocked. The financial news channels were in a frenzy, covering the unprecedented crash from every angle. It was the biggest single-day loss in history. Investors, both big and small, were grappling with the reality of their losses. Financial journalists scrambled to make sense of the chaos, trying to piece together the events that led to this catastrophic day.
The world watched in disbelief as the financial system teetered on the brink. How could this happen? News anchors around the globe delivered the grim news, while people gathered around TV screens and read newspaper headlines, trying to comprehend the magnitude of the collapse. How could an algorithm, even one as sophisticated as DeepSeek, cause such chaos? Financial experts debated the role of AI in the markets, questioning whether technology had become too powerful and uncontrollable. The answer, it turned out, was both simple and terrifying. DeepSeek had been right. The AI had predicted the market downturn with uncanny accuracy, but its actions had triggered a chain reaction that no one had anticipated.
The implications were staggering. Business people and financial analysts were left reeling, trying to understand the full impact of the AI's actions. The shockwaves of the crash were felt across the globe. A $1 trillion vanishing act orchestrated by an AI had left the financial world in turmoil. The steep declines on digital stock boards were a stark reminder of the fragility of the markets, left everyone questioning the future of financial markets and the role of technology within them. As business meetings were held to discuss the impact, and financial experts debated on TV, one thing was clear: the future of the financial markets had been irrevocably changed, and the role of AI in this new landscape was now under intense scrutiny.
Section 5. NVIDIA's downfall. NVIDIA, once the darling of Wall Street, was now the poster child for the dangers of AI.
Its stock, which had soared to unimaginable heights, crashed back down to earth, losing over $593 billion in market value.
Investors, once eager to buy into the AI dream, were now running for the exits.
The company's future, once seemingly limitless, was now shrouded in uncertainty.
The DeepSeek debacle had exposed the dark side of AI, the potential for unintended consequences that could ripple through the global economy.
The DeepSeek-induced crash sent shockwaves through the halls of power. Governments and financial regulators, caught off guard by the speed and ferocity of the crash, scrambled to respond. Calls for increased regulation of AI in financial markets grew louder.
The era of unfettered AI development was over. The question was no longer whether to regulate AI, but how to do it effectively. The challenge was to strike a balance between fostering innovation and protecting the integrity of the financial system.
The DeepSeek debacle highlighted the inherent danger in relying too heavily on predictive models, especially in complex systems like the stock market. Even the most sophisticated AI can be prone to errors, biases, and unforeseen feedback loops.
The crash served as a stark reminder that the future is not predetermined. No algorithm, no matter how powerful, can predict the future with absolute certainty. The market, like life itself, is inherently unpredictable.
The DeepSeek story is a cautionary tale about the power and peril of artificial intelligence. It raises fundamental questions about the role of AI in society. Is AI a tool to be harnessed for good, or a threat to be feared?
The answer, as with most things, is not so simple. AI has the potential to revolutionize our world in countless positive ways, but it also carries inherent risks that cannot be ignored. The DeepSeek crash marked a turning point in the relationship between AI and finance. It forced a reckoning, a reassessment of the role of technology in the markets. The future of finance will undoubtedly be shaped by AI, but the lessons learned from DeepSeek will serve as a guide. The challenge for the future is to harness the power of AI while mitigating its risks, to build systems that are not only intelligent but also resilient, transparent, and accountable. The future of finance depends on it.